If we're talking silver, I would recommend against buying coins as a whole in silver because it's much cheaper to buy bars. If we're talking gold, there's a very minor difference between buying a 1 ounce gold eagle and buying a 1 ounce gold bar. And so the thing is not to muddy the waters too much, but if we're talking in single ounce increments in gold, you could potentially justify buying a gold eagle. What you have to be careful of is avoid the word anything to do with collector or proof, because we're seeing, for example, certain IRA custodians we deal with are seeing in collector coins, which are not supposed to be in IRAs, in proof coins, they're seeing an average premium of 70 to 130% that is being charged by coin dealers. That is absurd. These are numbers that, you literally need the market to double to make your money back. And so at the end of the day, you need to be careful that you understand from the get-go what's the ask you're paying and what is the bid that you will sell at. Because as long as you understand the difference between the bid and the ask and what that difference is, you're liquid and you know what you're paying for. But the big thing is collector coins, unless you're a collector, there's nothing wrong with that. If you're investing in gold, silver, and platinum, avoid collector coins at all costs. There's a key difference, right? We're here to make money and pay the thinnest premium, between bid and ask, where we're not here to collect for the beauty of it, right? If you want to collect, that's fine, but that's something completely different than investing for profit. When you start talking about buying gold and silver, if you ask someone what type of product they'd recommend, like let's say today, Jonathan, you said, I want to buy $50,000 in gold. And I was to recommend out of $50,000 in gold, you buy 10th-ounce gold pieces. You should have a red light blinking off saying, well, why am I buying such a small increment when I could buy a 10-ounce bar and, a smattering of 1 ounce bars? Like, what's the reason here? Or if you ask a dealer a question and you say, well, how do I sell? That's a question you need to make sure you ask. How do I sell? Because the other thing is a lot of these coin dealers that will sell you a coin like this dealer told the client if he wanted to sell, they said, well, put them up on eBay. They wouldn't buy them back. So again, another red flag. If you're not liquid, stay away. Don't do business with them, right? And I think the last question, and this is the most important, right, is you need to understand, what is not necessarily what's the premium, what is the spread? What is the difference between the bid and the ask? The ask being what you're paying when you buy and the bid being what you're selling at when you sell. As long as you know those things, you'll be protected. Those are the facts of the matter, right? You have to do your best to take the emotion out of it. And that's where coin dealers really thrive, because they'll make it an emotional decision. The country's going to hell in a handbasket and the dollar's crashing. And even if that stuff may be true, when we're investing, we have to remember, if you make decisions based on facts and not emotion, we protect ourselves in that regard.
So why is it that coin dealers encourage you to buy small incremental weights of coins? Why do they try to get you to buy the small ones?
At the end of the day, it's confusion, right? You have to think, right? Like if you put $50,000 into gold today and you bought 1/10-ounce pieces, what are the odds off the top of your head on a phone call when you're, paying for goods? You're going to be able to calculate what your price per kilo or per ounce is when you're dealing in 10th-ounce or quarter-ounce increments. It's pretty slim, like I work in this business, you work in the financial industry, but last time I checked, neither of us are, financial or not financial, mathematician savants, right? We're not doing math on the fly like that. You might have a calculator. And so really, it's to confuse the investor and make it difficult to calculate the average cost. Aside from that, one of the other tactics that they will use with these small increments or these collector coins is say, well, it's a specialized market. The collector market's one you want to deal in, because when the bullion market, when gold and silver, when the price drops, they don't lose value. When the price goes up, they go up. And that's just nonsense, right? Like, again, think of it. If it's too good to be true, it's too good to be true.
Well, especially because one of the challenging things I would think about coins and stuff like that is that there's so much diversity in terms of what coin you're getting, which
Yeah.
one you're going after,
Yeah.
that adds to the confusion is that you need an expert to tell you whether that's a collector's coin or
Yeah.
not a collector's coin. And unless you're an expert, you're going to always be at a disadvantage when it comes to information.
Exactly. And I think the thing is, at the end of the day, the moral of the story here should be you want to get as much of the asset as you can for the best possible spread.
So let's say I land on one of these gold dealers' websites. What are the list of things that I should keep an eye out?
First things first, above all else, price transparency. You would be, if we're talking about IRAs, because precious metals and IRAs is a huge business, right? 99% of these dealers have zero price transparency. Meaning, if you go on their website, you can't, even if you sign up, you can't see what the prices of their products are. There's no live feed to where they will show you the prices. That should be red flag number one,
So
right?
how do you end up getting the price? Are they trying to get you on the phone and then they sell you and they do whatever they can to make it sound good and
Exactly.
it's never in writing?
Exactly. It's the only writing you get is the invoice after you purchase. And so, and by then you purchased it already, right? So in IRAs, it's price transparency. That's number one. I also think the big thing to look out for is there should be some information on products, right? You want to be able to go on there and, let's say you click on a bar, you want to know what mint is it coming from? Is it LBMA or COMEX approved, right? These are things that the normal person doesn't know. So you want to have that information there, transparency, right? That's huge. The other thing I think is a big thing to look at is the type of products that they have on their site. I would say a good 75% of these sites, if they're not selling, incremental size coins like this, all you're going to find on their site is non-approved products, beluga whale 1 ounce silver piece or 1.25 ounce Captain Long John silver. So again, nonsense. If it's not coming from a government mint directly, right? Like an American Eagle from the US Mint, if you're going to buy a single ounce coin, or a Canadian Maple Leaf, or one of the best bars we sell in gold. It's one of my most popular products, Royal Canadian Mint Kilo bars. They even come with a certificate of assay, which for the novice gold investor, it's a authenticity certificate. These are the products you're looking out for, something from a government mint or something that's LBMA or COMEX approved. The second that you start seeing incremental, even if it's above an ounce, 1.25 ounces, 1.5 ounces, beluga whale, Canadian wildlife, all this stuff, red flags should go off immediately. One of the big things to look out for, and that I see so often here on sites that potentially could lead you astray, is the use of figureheads or, these celebrity endorsements to get people to buy gold and silver from them. And one thing, this is not to say that everybody that uses a figurehead is, out there to overcharge you and, make money off of you when they shouldn't be. But for the most part, a lot of these companies that are, charging these egregious premiums and selling collector items are using predominantly Republican talking heads. You'll see some of the Fox News hosts, you'll see, even the president's son, former NFL players that are speaking out there. These people are not endorsing these companies because they personally purchase goods from these companies or they've had a good experience with these companies. These are affiliates, right? And this is done through affiliate marketing. And so one thing to think of is these people don't get a lump sum fee. They are paid on a percentage basis, right? They are paid for anyone that comes in the door using their likeness. The standard that these companies are paying out is anywhere from 4 to 12%, depending on the company, for everyone they bring in the door that does business. And the first question you should ask is, if that company is paying an affiliate, one of these newscasters or one of these celebrities, 4 to 12% of the money I send them, how much are they actually charging me?
That affiliate amount is essentially, in some cases, bigger than that spread that you were talking about that you should be worried about. And so
Uh-huh.
if the celebrity is getting the full spread that you should expect from a buy versus a sell, then the company's making money with more than that.
If this company, and again, we're not naming names, but let's say this company is charging you 70% of a premium, which unfortunately there are several out there that are on mainstream news stations with advertisements that have these celebrity endorsements. You have to think, well, how long is it going to take me to make that back? Right? They're not paying you 70% above the market value for that asset when they buy it back. They're paying you sometimes less than what other people are paying, but at best, some of them are paying melt value or spot price.
Yeah, I mean, that's tremendous if you think about it in the sense that you are giving the celebrity the next 10 years of your growth in that investment.
Yeah. At the very minimum, I mean, listen, you're giving them at least a year. So, I mean, I like sports and, I like watching movies and I like some of these, politicians or newscasters that are out there, but I don't necessarily want to give them a year's of my investment returns because I like them so much. The big thing that should also be asked, don't assume you're liquid. It's an assumption. If you buy a stock, aside, we're not talking penny stocks, but if you buy a blue chip, you buy the S&P or the Dow, you're liquid, right? Yes, there are fees involved, and yes, there can be a spread between bid and ask, but if you buy a stock on a Monday and you sell it on a Tuesday, you get your money back. With precious metals dealers, not all are created equal. And yes, there are dealers that will not buy back what they sell you. And so that's another question you should ask off the top is, do you buy this stuff back?
Most of us would assume that it does not matter what form I bought the gold in. If I bought gold, gold is gold, and anybody would be willing to buy the gold because it's gold. And what you're saying is that that's not entirely the case. And there are a lot of situations where you think you have gold that someone else would want to buy simply because it's gold, only to find that they won't. Well, fantastic. Appreciate it, Greg. Thanks for coming on.
Thanks, Jonathan.